Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and it is June the 6th, Sunday. And if it's Sunday, tonight is Sunday Night Futures Live. Just a reminder, 6 p.m. Eastern Standard Time. We'll get together. We'll watch the opening price action of the futures. We'll talk about some news events, where we think the market is going this trading week. And we'll also talk about some of the chart requests that our members submit. And if we have time, we'll take some chart requests from the audience. So please subscribe to the channel. Click the bell button to get alerted when we go live. If you want to get alerted in advance of us going live, that way you don't miss a single minute, there are 2 links below. One is my 5-part video tutorial on my top 5 favorite candlestick patterns. You'll get alerted 15 minutes to a half hour prior to us going live. If you're not interested in that free video series, there's another link just to get alerted 15 minutes to a half hour prior to us going live. So enter your email address now. Don't forget, 6 p.m. Eastern Standard Time tonight. Before we get into our best stock charts, which are going to be Cisco, General Dynamics, Texas Instrument, Google, Alphabet, and LABU, which is the Direxion Biotech Fund, leveraged ETF. I want to talk to you first about our sponsor being our friends over at TrendSpider. This is new. Bring a tank to a knife fight. It's a good statement. Folks, you need to, in this day and age, you have so much artificial intelligence out there. TrendSpider has brought what the institutions are using to try to rob you of your money, to relieve you of your money. They're bringing that technology to the mainstream. So automate your grunt work, speed up your technical analysis, and improve your accuracy by using automated technical analysis. If you're new to technical analysis, this is for you. Why? It's because you practice manually drawing your support and resistance levels, and then you use the automated click of a button, automated trend line functionality on TrendSpider to validate it, whether or not you're accurate or whether or not you missed an opportunity. If you're an experienced trader like I am, you hone your skills, you keep them sharp, and you learn a new thing every single day. I can't tell you how many times where I've annotated my charts, validated my accuracy. I've been accurate, but I may have missed another opportunity, whether it be resistance above or support below. And that helps refine our skill sets. So reduce costly analytical mistakes and time your trades with precision by using their trade alerts. You're going to see me use them today. So take a moment, go over, there's a link below, 35% discount code, cheapest price on the web. They have a 7-day free trial offer. They also have a demo tour, and they have TrendSpider University. Lots of tutorials, and if you get hung up, reach out to them. They're very, very engaging. You will not be left on your own. I believe in the product so much that I give it away free with our silver and gold level memberships. So act now, 35% discount code below, or segue over to the Contrarian Trader, where you get my trade alerts, my in-depth commentary, and our one-to-one live stream sessions. These are private, these are not public, but that's where we engage with our members. And now let's get to our trades for the new trading week. Now, before we begin with Cisco, I want to remind members who may be watching that I've posted in the members area the week ahead commentary. I've provided a overview of these watch stocks. Right now, we're just going to set up trade alerts. And I've also went into detail on our positions and whether or not we are looking to stay bullish on the market or if we are becoming more and more bearish. So head on over, watch the week ahead commentary. You do need to be a member, but again, 14-day free trial offer. All right, so we're going to kick things off with Cisco. Cisco has been consolidating very, very nicely for quite a while now. We had broken out above resistance back in March. We consolidated very strongly, attempted a breakout in May, failed. We dropped back down. Now it appears as though we are breaking out, or have broken out, I should say. And there's the breakout point. Now, one of the valuable tools that TrendSpider has is automated technical analysis. What you do is you click a button, and there appears your resistance level above. Now, the question should become, could there be other resistance levels out there? So what we're going to do on this weekly chart, we're going to overlay on a monthly time frame, monthly resistance. You can see what appears here in blue. This is the value of TrendSpider, automated technical analysis. Because not knowing the fact that you have monthly resistance above and you're just using the weekly chart, you could be walking into a firestorm of selling if you bought a gap up on Monday. You don't want to do that. So how I propose that we will be entering the trade is we'll be watching for a pullback and a retest of support. We're going to keep this active for 15 days. So we have a retest of support, but I'm making a note to myself as a reminder that we do have monthly resistance above. So that tells me do not go chasing a rally into the new trading week. Allow the shares to come to us. The next chart out, GD, General Dynamics. Now, General Dynamics had pulled back in the month of May, consolidated for a few weeks. Now, last week, we saw a breakout above resistance. Volume could have been a bit better. And if there's one caveat about all these charts I'm going over, and this is the same thing for the markets as a whole, volume was not good last week. It was very, very poor to the upside. So let's be careful. So we have a nice breakout here. Might we see continuation move up higher? Sure. The question I have is, do we have monthly resistance above? We don't know yet. So let's throw up first our weekly support and resistance levels. No immediate resistance above monthly time frame. No monthly resistance above, but I am picking off where I would be a bit concerned up here at 204.50 per share. We closed at 193.57, so we have lots of room to the upside before we hit real serious resistance. So what's the play here? Well, I'm going to do a deeper dive into a daily chart because I want to take a look at the Bollinger Bands, and they are very, very tight. I think we're setting up for a Bollinger Band squeeze. I would be very interested in opening a position on a retest of daily support, and we'll keep it active for the week, and our alert is set. And one thing I want to point out is seasonality. Seasonality in June is okay, but you can see that we begin a trend that improves, and this is data that goes back 12 years, that improves through to September. So we're in a seasonally favorable period of time for General Dynamics. So this is one of the reasons why we like to trade. And going back for a moment to Cisco Systems, I meant to go over this. Cisco, again, going back 12 years, June is an okay month. It's not a great month, but the month of July is by far, not by far, it's equal to September in being the best month out of the year. So seasonally favorable period of time with both Cisco and General Dynamics. So our alerts are set on those two. Texas Instruments. Now, the semiconductor sector did very, very well last week. Technology did very, very well last week. I like the semis better than the technology sector as a whole. Taking a look at Texas Instruments, which appeared on our screener. I like the setup. Let's go to the weekly chart. We did not close positive on the week. That does not mean that we will not trade it. Here's our resistance level. And you can see what they did last week because they broke it out the week prior. They pulled it back and they did a retest of support. Now, as you can see here, I'm going to remove resistance levels. I'm going to add them back on weekly first. No real serious overhead supply above to be concerned about. However, this changes when I overlay monthly resistance. Right? So we have monthly resistance in dashed line overlaid onto a weekly chart at 198.57. We closed out this session last week at 190.07. So we have a little bit of room to the upside. But where do we place our alerts? What would make this trade attractive? Daily chart. I will point this out. We have a rising daily resistance level in red and declining support in green. So this is like an inverse, not an inverse. This is a megaphone formation. So we have a breakout on a daily time frame. I want to see a retest. Making myself a note that we have weekly resistance above, and we'll keep this active for 5 days, and we're good to go. Now, taking a look at seasonality. Seasonality in May is very good. It drops off in June. It improves in July. Not the best period of time to be buying Texas Instruments. So a little bit of a file to be placed in the folder of Texas Instruments trade. I would not allow seasonality not allow me to enter the trade, but it may influence my position sizing. I may stay smaller with the trade, not be too aggressive. So note to self on Texas Instruments seasonality, not the best time of year. However, price action looking pretty good. We want to see a continuation move up higher here to validate the strength that we saw on Friday is being carried through into the new trading week. What's going to influence Texas Instruments moving up higher? Yields, folks. We're going to be talking about that tonight. Join us again, 6 p.m. Eastern Standard Time for Sunday Night Futures Live. We're going to be talking about the bond market. You want to see yields drop for Texas Instruments, the triple Qs, and technology as a whole to move up higher. Now, the next chart up is going to be Google. Google broke out above resistance the week prior to last. We had a continuation move up higher last week. So this is one where I don't want to chase it. This is a trade where what I might do is open up a naked put or a strangle, which is the sale of a naked put and the sale of a call option, and you generate cash flow. So that's certainly a strategy here. And in fact, we did that last week. Let me show you first. We'll come back to Google. Here was a trade that we put on. This is our Slack forum for members. We opened up 10 contracts of CRWD, CrowdStrike. They had reported earnings on Thursday evening. So we sold a deep out of the money 240 call and a deep out of the money put, a 197.50 put. These options expired worthless on Friday, and we collected 100% of the premium. So a very nice trade, and our net profit, not including commissions, of course, was $1,110. And what we did when we're trying to decide how we want to enter these trades, and I share this with members so we have full transparency. This was prior to me opening up the trade, and I wanted to see what was the probability of CrowdStrike closing in the money on any one of my legs, my call leg or my put leg. And there was virtually 0% probability. The however is that we took advantage of the increased implied volatility. Basically, you have all these traders out there, and they're amateur traders. They're out there and they're buying call options on the day of earnings, thinking that they're going to make money. They don't realize the next day there's going to be implied volatility crush. And even if the shares go up, if they bought call options, they're still going to lose money because the value of the option in terms of their implied volatility are going to collapse. So we don't buy these options, we sell them. So if you're wondering, who are you buying these options from? You're buying from guys like me. I look for expensive options to sell, and we sell them because rarely does the implied volatility live up to its names. Usually when you have increased implied volatility, the actual inevitable volatility doesn't really pan out. So that was the case on Friday. Again, a very nice trade. A couple of our members to join in on this one. So congrats to them. Back to Google. Okay, weekly chart. We certainly have a bias to the long side. We have very little in terms of overhead supply. Why? We're right at all-time highs. Let's go to a monthly chart. We're right there. So how do we trade this? How do we enter this trade? Simple. If we are trading this as an equity trade, meaning I'm going to buy the shares of Google, I want to see a retest of support. Now, I'm probably not going to buy the shares. I'm probably going to open up a Strangle and try to generate some cash flow off of Google. And I'm going to show you in a moment how TrendSpider can help you to identify good areas at which you'd want to place your strike prices on those options. So stick with me for a moment. So if we're going to buy the equity outright, what we'd want to do is we want to see a touch or a bounce of Friday's breakout point. Simply a validation of the health of this breakout. So if we're going to buy the common stock, 5 days, we're good. I want to see a retest. However, what if I want to open up a strangle? I'm not going to buy options. I want to sell options. Well, what we can do is use the automated trend lines. I'm going to take them off, put them back on. Isn't this valuable information to know where you have resistance above? Despite the fact that we're at all-time highs, the algorithm is able to pick up, at least on a daily time frame, using shorter duration prior highs. They're able to pinpoint where the probability of resistance is. Resistance level number 1 is going to be right up here at around 2,570. So I would entertain selling the call at that strike. What if I want to be really conservative? I would open up a call option. I would sell a call out at, let's call it, we need to round this down or up, 2590 call contract. And to the put side, we could be a little bit more aggressive here because we do have a bias to the upside. We are breaking out, and we may want to use this support level down here at 2300, or to be really conservative, down here at 2270 as our strikes to the put side. So we're going to talk more about this, and we'll, of course, as we always do, we want to use our probability calculator on, I use Fidelity or TOS Thinkorswim. And if you don't have a probability calculator with your brokerage, you got to find a new broker, because you need to know your POP, your probability of profit, if you're going to trade options. And again, we're not buying the options. We want to sell the options, because while we limit our upside, our probability of profit is far greater than if we buy the option. And we become far more consistent with profitability by knowing the probabilities and selling the premium rather than trying to buy and hit a home run. So that's a strategy with Google. Probably going to open up a strangle here. The next chart up, LABU. We're looking at a weekly chart. Now, obviously, LABU has been through heck over the past couple of months. So we've just simply watched it. We have traded it in the past. We've done well with it in the past. But when this gets going in the wrong direction, well, then we want to step away and simply watch it. We haven't even traded options on it lately. So we tried to break out last week. We were rejected. So what I'm going to do here is I'm going to create an alert on a weekly time frame, break through, no sensitivity, and our alert is set. Now, one thing that we did do on Friday is that we broke out. I'm going to put back on the automated trend lines in a moment. Here's the breakout. Now, using the automated trend lines, and this again, folks, I didn't catch this. This is what the value of the algorithm. It's picking up immediate resistance above here. So I need to see a close above this resistance level before I got involved. Now, this is another one where we could open up a strangle on it, do an options trade, or simply buy the shares outright, tight stop loss. Whatever our decision is, our alerts are set. So our newfound resistance on a daily time frame, we've set an alert there. We want to know if and when we break out. Might we open up an options trade here? Sure. It's certainly possible. Or we could simply buy the common shares outright and use a trailing stop loss order, because LABU at current is still a trade, or still an ETF that's trying to find its footing, because the trend on a monthly and weekly time frame is still to the downside. So we want to be very, very cautious here, which the more I think about it, the more I like opening up a strangle trade on LABU until such time as we see the trend change to the upside, and then we can buy the shares outright. So with that, folks, don't forget, 6 p.m. Eastern Standard Time tonight, join us for the opening price action of the futures, and give us a shot at the Contrarian Trader. We have a 14-day free trial offer. You get TrendSpider included with your membership. If you join up for a silver or gold level membership, you get access to our Slack forum, and you'll be able to see The real trades I put out there, the actual trade execution, I copy and paste out of my brokerage. I put it right into the Slack forum as I showed earlier. So you see exactly what I'm doing and exactly how I arrived at those strike prices. So hopefully I'll speak with you tonight. Have a great day. Be well.